Welcome everyone to the Gamma Optimizer live video. It is out of a schedule now, it's outside the regular schedule, and that's why I'm doing it in YouTube. So because it's in YouTube, I have no idea if everything is okay. If you could type on the window if sound is okay and video is okay. It should be okay, but a confirmation will be nice. And also because it's in YouTube, the delay is a little longer than usual. Okay, we only have like 3 people in the room, but it's okay. The idea is to leave the recording here for everyone else. Thank you very much. Everything is good. So let's start, and so we can get a recording and anyone else can watch it later on. And for you guys, thank you for attending. Okay, in terms of closed positions, we have last week we had 2 wins and 2 losses for the official NAS1 trade, which is okay, wasn't a scratch. We didn't do a trade for the Fed meeting. No, I'm glad. The position for today might or might not work. It's working right now. Who knows what is going to happen to the end? But the market seems to be a little tentative. But it's still, I mean, the net is starting. So far, at least, we are not starting in a losing streak. So that's good. So the jury is still out about how this new net will perform. At least it's making some money. In terms of the market regime, okay, the interesting thing is the GT level is very stable. It's around 3,993, and it has been oscillating around those levels for a while. Now it has been oscillating around the 4,000 magical level for a while. We are in short gamma regime right now, but not by much. We are in a short gamma regime by 10 points. We have been very close to the GT level, and it's surprising because only a couple weeks ago we were in the midst of a new financial crisis. We were having a meltdown of the financial system, and yet the market is right there. No, it will only take a few more points and they will push the market long gamma. So right now we are neutral for practical purposes. Remember that the GT level is just an approximation. I don't have the means to compute an exact GT level due to limitations of the data that I possess. But even with the limitations and even with the approximation, I think we are really close to where the GT level should be. We are usually like 10 points, plus or minus 10 points from the GT level. So we could be at the GT level right now. But even like that, my expectation is that we are going to be long gamma pretty soon. A long gamma flip has to happen either today or tomorrow, or I mean in the near term we are going to see a long gamma flip. And the gamma imbalances are very low. No, we have extremely low gamma imbalances. So in terms of realized volatility, we should be seeing very low realized volatility, and as long as we remain close to the GT level, that will be the story. So surprising to see the market where it is, but well, in one sense, I am glad that the market is still hugging the GT level. They didn't manage to take it away that much. In terms of volatility is also interesting. Now we have monthly realized variance is 18%, and the weekly is 17.5%. So both of them are converging. Now both of them are basically the same. So that's a good sign about price discovery. That is telling us that price discovery is stabilizing. Sadly, both of them are really elevated. So price discovery is stabilizing in an elevated volatility. So I guess this is like back to normal, like high volatility environment. Even though that means that there hasn't been that much interesting action in the near term, at least realized variance is consistent, but it's elevated, and it has been elevated for years now, for a couple of years now. So what else can we do? No, that's what we have right now. VIX is at 21.29, and so that means that there is a little bit of variance risk premium versus realized, which is not bad. The VIX has been really stable, and I like VIX above 20. At least in this particular juncture, VIX above 20 is what it should be. At least it has to be above 18, no above the monthly one. The 1 week VIX is kind of low. It's in 19.53, and there is even a smaller BRP at the weekly level. So I think we are back to normal in terms of implied volatility. I think that the extreme overpricing of implied volatility we saw last week is gone. All of these crisis mode meetings and things that were happening are finally clear. So I guess dealers are coming back at pricing volatility, not cheap, but at least kind of normal. No, so volatility is like normally priced at this particular point from SPX options. And we can see it here in the term structure. The term structure is back in contango. If you ignore, well, don't ignore it. I always put, I think in YouTube you cannot see my mouse. So if you look at the chart, remember blue line is the current volatility, red line is the one from last week. If you look at the chart, you'll notice that the first point represents volatility for today, the implied volatility for today, and you can see it's gigantic. No, it's huge, but that's normal. It has always been normal, and it's even more normal now that dealers are wising up to the zero DT crowd. So they are closing all the arbitrage opportunities there, and that's why you see the daily IB is so elevated. No, they don't want people to make money on zero DT. And but other than that, pretty much is contango. No, the slope of the curve is nicely upward, and it's kind of smooth. There are not that many bumps. There is just a little mini bump in a couple of weeks from now, and I don't know what it is. It could be a new Fed meeting. I don't know. It could be something, but it's not like that big of a bump. And in the aggregate, absolute levels of volatility are kind of on the low side. You know, this is actually really good. This is the opposite of what we saw. We saw this end of the world inversion, and now we are seeing all this back to contango. So I am glad that things are looking okay. So in that sense, we are normalizing of how, and dealers are kind of going back to like not pricing the end of the world at least. In terms of realized variance, this is a completely different picture. No, if we look at realized variance, then we are seeing something completely different in realized variance. We are seeing realized variance at distress levels, really elevated values, crazy values. You can see the peaks. The blue line is the intraday realized variance minute to minute, and the red line is VIX. No, so you can see the realized variance has been overtaking VIX consistently many times in the recent past. And the absolute levels of intraday realized variance are huge. We remain above 10. It seems that the magical 10 level, it cannot be broken in 2023, and we are seeing like massive amount of volatility, of realized variance. Sorry, and that's just correlates with liquidity, and it's the same story week after week. When I do this presentation, liquidity is completely absent. There is nothing there. No one has returned. So for those of you that are looking for some kind of sign of when the next bull market will start, or when the current bear market will end, I will offer you realized variance. So I will, there are many signs, but I will offer you, this will be an early sign. When you see this blue line, when this blue line starts to go below the 10% level, not only it starts to go below, but it can oscillate, but it will oscillate around the 10% level, not around the 20, not around the 30, but the 20. And you see that for like a week or two in a row, that will be a sign that liquidity providers are coming back into the market. And historically, liquidity providers like to come at the end of bear markets or the beginning of new bull markets. So for those of you that are always playing upside, that will be that's my recommendation. Keep an eye on intraday realized variance. That will be like the earliest sign that you will ever see. So for now, there is no smooth sailing from this chart, which is in contrast to the previous one. The previous one looks like the volatility dealer seems to be pricing smooth sailing into the future. Realized variance is looking in the past. There is no smooth sailing from the past right here. In terms of variance risk premium, okay, so finally there are a couple of things to say. We have enough days into the new year that I think we can safely say that dealers are doing a fantastic job of pricing risk in 2023. Variance risk premium has been positive all year long. It's not huge, it's not like the one in 2021 or even before. No, it is small, but it's positive. And I think that's good. That means that whatever adjustment was done to the computer models are working. Those adjustments are working fantastic. And because of that, and because variance risk premium is low, okay, just because right now is low, we could use option prices as a fantastic proxy for the ultimate price distribution of SPX, or for the ultimate expected or implied price distribution. You know, guys, that sometimes I like to use options as a probabilistic distribution, but most of the time when BRP is very elevated, it's not meaningful to use option prices as a probabilistic distribution because they contains huge amounts of variance risk premium into them, and the two distributions will not agree. Now, that in a sense, the implied distribution will be way more pessimistic than the actual distribution. But right now, because we have, like, most of the year, variance risk premium has been so low, I think that whatever is the distribution we compute from option prices is going to be really, really close to what actually is happening. And we can see it here, at least at the monthly level, it's been very, very accurate. So that's a good thing. You know, we could start using it as a predictor of, like as a complement to Ultra, in a sense. I mean, we could contrast the predictions from Ultra with the expectations from option dealers here. Also, because it is small but positive, then we could use this as a green flag, no? Like as a go ahead to do some tail selling here. We could start selling tails. I think what this shows is that anyone that has been selling tails in 2023 must be making tons of money. I don't think they have lost that much. I mean, I haven't quantified the edge, but I think the tail selling here, tail reselling, has some positive edge right now because of how variance risk premium is positive. Now, it doesn't mean that it's smooth sailing there. I guess because it's so small, the amount of variance risk premium, it means that most of the tail selling that you'll have to do will be really close to where the market is. So those positions, if you decide to become a premium seller, those positions will be will give you a little bit of heartache from time to time, in the sense that you will be scared that they won't work because variance risk premium is so tight, it's almost there. So you'll make money, but you'll suffer quite a bit making money. But at least variance risk premium is good. Okay, so what is the trade plan? The trade plan is continue doing NASDAQ. I think NASDAQ is decent, and I have been working for a week now, for a little longer than a week. This problem with the 50% binary, I wanted to share some thoughts about this. The main problem with the 50% binary, or with any system that is purely directional, because this is what it is, this is purely directional, it comes down to the big philosophical question about the market. Is the market stochastic? Is the market chaotic yet deterministic? Or is it stochastic, non-deterministic? No? So the key to solving that kind of problem is to first do an analysis to see if the market is truly stochastic. No? And that's what I've been doing for pretty much all 2023. Some modeling and analysis of the market, and the answer is partially stochastic. Let's say it's in the majority, at least at the 1 day level, it looks very stochastic. However, it's not quite. It is more like a superposition of an stochastic process, a winner process, plus some kind of deterministic function that we don't know what it is. No? That might or might not be autoregressive, no? That might have or not a dependency on the past. So basically, all these neural nets we have created in the room, like Ultra and Supreme and ALMA and NAS, whatever they are doing, they are trying to isolate the non-stochastic portion of the function. And due to that nature, we are never going to expect edges of 90% or 100% on the system, because we are admitting that the stochastic component is the majority. That means that even if we are 100% correct on guessing what is the non-stochastic function, we are not going to have a perfect system. We will never have a perfect system. But the idea is that at least we get some edge from the system. An edge is 5–10% edge. And that's kind of the focus of my research right now, like realizing this. When we were doing the 5-day trades, at the 5-day level, the stochastic component of the market was substantially lower, because as the time frames progressed, then the market exhibits more deterministic behavior. It's only when you kind of start zooming in time where the behavior of the market is more stochastic. But on the long run, the market is always very deterministic. It's really momentum driven, and you can see it. So in a sense, I think thinking about this is it could be easy for us to go back to longer term systems. The problem is on the execution and the risk management of a longer term system. Like if we go back to a system for 5 days, at the weekly level, the momentum is very obvious, and the neural nets pick the momentum really, really easily. Okay. Okay, I have a question. I'll talk about this. But so let me finish my thought about the 5-day. So in one sense, to me, it's very tempting to go to a time frame where the stochastic component of the price action is lower and lower, and then there is some kind of momentum-driven deterministic component that is higher and higher. So therefore, the edge becomes higher. But the problem with the systems is the amount of risk we start taking unless we sample them. So we have to downsample them. That will be one of the solutions. One of the solutions is to downsample the systems to only do 1 trade per week or a couple trades per week, because now that we have daily options, if we go to a weekly system, it will be like 5 trades per week. And therefore, there is more capital on the line. And if a surprise comes, then it's like 5 losses in a row. No, it's like right there, all of them die. So anyway, so that's kind of like what I am. I am in a research phase where I am trying to determine if the risk reward of going longer time frame is better than the lower edge of the daily one. That's it. So that's what we have. Like the contrast with right now we only have 1 trade open at the same time. We only have 1 trade because the trade expires the next day. So if there is a surprise, then okay, we lose the money on that trade, but then the systems adjust to the new information that has arrived. But in a longer time frame system, the information is set in stone, and even if new information comes into the market, we won't be able to act upon it until like 5 trades later. No. So we'll see. So that's kind of the thing, and I'm glad that you guys are participating in the discussion here. Let's see. So I have a couple of comments. The new members are confused about the probability. Okay, so let's look at this. Let's go and look at this and clarify what the system is. And I agree that it could be confusing when you see probabilities there. So let's here come back to the Variance Center, and let's look at what the predictions is. Let's dissect a little bit this widget. So the widget is just basically a help. The most important thing that I want you guys to get from here is what is the spread type. You could ignore pretty much anything else. You could just ignore anything that you see in this little widget and focus on the spread type. The spread type is telling us that this is a bull spread. So that means that the current net is bullish into tomorrow. That's it. And because of the design of the current net, is bullish on the current price. So what this means is that the prediction is that the net thinks that the market will be above 3,985 or whatever is the level at 4 p.m. The net is for 4, but let's assume that this is 4. So what the net is telling us is that it's thinking that the market is going to be above this level. Now, how do we do that trade? There are many ways, and I know some of you might trade this in futures. We like to trade this in options. So the way I do it is I do some kind of binary. So this is like the most rough binary which is done with a vertical spread that is bullish. And notice that it's not perfect at the level. In order for us to win, the market has to finish about 5 points higher. And that's kind of the reality of the imperfection of the replication, no? And that's how imperfect it is, and it's due to the skew distribution of options, which is like heavily negative skew, so it moves the strikes higher. So it affects us for bull spreads, but for bearish spreads it actually benefits. So it produces a benefit for half of the trades, and it produces it's a bad situation for the other half. So I guess in the long run, it really doesn't matter that there is an approximation. And I am glad that this happened. Sometimes there is no spread shown, but it doesn't mean that there is no trade. The trade is still a bullish trade. It's just that whenever the system went to look for potential verticals, maybe the quotes were outside the 2.5 region where we want to price it. We want to price the spread as close as possible to 2.5. So maybe in that particular moment, options were away. And this thing refreshes every 20 seconds. So in 20 to 25 seconds, you will see a new one there. So don't worry. Now, in terms of the probability, which is the confusing thing for the new members, this is just historical. The probability here doesn't mean anything. Doesn't mean that the trade will work. That doesn't mean that this is 89% probability the trade will work or won't work. The probability is just because the neural net behind this whole thing is a binary classifier. So it's a neural net that is making a decision. Is white or black? Is a cat or an elephant? Is bull or is bear? Okay, and we assign, and of course, when you train the neural net is not like binary, like it's not 100% sure there is one or of another. It has a range of potential values because it's a mathematical function. At the end of the day, it's a sigmoid function, and the sigmoid function can take values between -1 and 1. So it can take, it's a region that we bias, and we provide a probability between 0 and 1. But what you want is the region. If this number is between 0 and 0.5 is one category, and between 0.5 and 1 is the other category. So the lower values is for bearish trades, and the higher values is for bullish trades. But that's the neural net, is the probability of the classifier, but it's not the probability of the trade really. And also, for those of you that are really into machine learning and neural nets, you know that there is a loss function, no? And the loss function for a binary classifier is called the binary cross entropy loss function. So I'm going to tell you the losses on these nets are elevated. This net, for instance, the current net we have has like 0.5 loss on the prediction. So what does it mean? A 0.5 loss means that the net tends to be wrong with high probability. So for instance, if this trade fails tomorrow and this probability is high, then this is a high loss. No, it's different if the probability is like 0.51 and the trade loses tomorrow. The loss is lower. No, that's how binary cross entropy works. So you have to be mindful that don't assign to this probability. Don't confuse it with the probability of the trade, because the binary cross entropy loss of the net is actually elevated. Like 0.5 is elevated. If we have a very low binary cross entropy, like 0.03 or 0.05, I will tell you guys that probability, assume it, that is the probability of the trade. But no, because it's 0.5, sometimes it's 0.4, depending on when I train the nets. So it is elevated, and you cannot assume. It's just basically assume that that's the category, but don't assume that that's the probability of the trade. Okay? Sorry for the long explanation. Let's go back at the trades. Like, trades open at the same time is unmanageable. Well, I could look at the 3 trades. We could go to the 3-day to look at the 3-day trades. The 3 days there is edge, but the edge goes higher and higher. I did a plot of how high the edge becomes. The edge starts going higher from like 2 days, 3, 4, 5, and then it peaks around 10. After 10 days out, the edge of the system comes out because the momentum portion of the function, of the deterministic function, goes away. the momentum in SPX doesn't seem to last longer than 10 sessions. So I guess anything between 0 and 10 is a good candidate for some kind of momentum-driven neural net. And it's something that we could do, but I will not recommend having 10 trades in a row and just waiting 10 sessions for a trade to, to win or lose, to know if the trade is winning or losing. I mean, if there is a Fed meeting, it kills everything. And then welcome everyone that is joining. I really appreciate. Thank you for saying hello. So, okay, that was the answer to the question about probability. Now, in terms of like quickly, because we only have 5 more minutes, you can see that we are short gamma. You can see that the imbalances are extremely low. Extremely. This is pretty much a statistical noise. 13 billion of notional, 6 billion of notional. That's nothing. The market is extremely slow. You can see the realized variance is also very low. This is a welcome change to see realized variance at 11.35. The realized variance for the last half an hour is 7.3, which is extremely low. And then you can see also that in terms of hedging walls, we don't have that many hedging walls in this area of the market. The next one is like 4,030, it's like really high. And they are very small. All of the hedging walls are very small. So the market is supposed to slow down as it moves higher and higher and higher. So not bad. I like what the market is doing. I also like the current trade. I plan to take it. And one lesson that we need to take from Friday. For instance, on Friday, I could not take the trade around 4. And the market closed, look at the market, closed at 300, 970. So for those of you that were lucky to get the binary really close around this value, you are safely on the green right now. But I got in my case, I only got the 80, 85 the strikes because I missed the trade for a little few minutes. So today you have to remember that the idea is to take this trade before the market closes. So probably ideally before 3:59 p.m. So I'll try to be really disciplined today and take it because I don't want to be screwed like I got last week. I got screwed up. Okay, I have many more things here. Are the current BRP 350 useful for 3 days trades now? Well, those systems, the 350 was one system we used to do long ago for 3 days. I haven't tracked them in a while. I keep the system there because I always promise members. Some members are doing it, but we'll see. I don't think that they are that accurate right now. I will not recommend doing them. I'll rather design a new net like NAS inspired, like NAS inspired nets, and then maybe have a replacement. Okay. So for now, please don't use them. But conceptually, that's one way to go. Like I have a 3-session trade, and it's easier to manage, and I guess you have a couple more days for it to work, no? But I don't know if the neural nets that we currently have, they are very, very old. Those neural nets are very old, so we need to retrain them. I have a question. So we might be more stochastic this year versus last couple. Yes, I think so, Gio. We have like I think we benefited for some kind of near-term momentum in the past, but I don't see how it is happening. Like the market is, the intraday change reversals or momentum this year have been amazing. I don't know what is the reason. Maybe it's the 0DT crowd that is inducing those reversals, but those things are really messing with the systems. If you look at the NAS trades, the new NAS1 trades, we have 3 failures, but if you notice the 3 failures, out of the 3, only 1 was like a real solid failure. The other 2 were reversals. The market was actually comfortably winning, and the market reversed hard, and then we lost. So I don't know. I am just trying to find the system, and what I have been doing for the past week has worked really well, and I might announce a couple of new nets soon, but I'm just testing them internally at this point. Okay, everyone, I really appreciate you guys joining. I think this I got extended on my little rants longer than I expected, but it's really cool to have you guys back. Sorry about last Friday. I was in the midst of doing one of the new neural nets. So anyway, this Friday we are going to have a normal live video this Friday too. So that way we go back into the group again easily. Thank you again, and I hope that you have a great day. And any questions that you have, please don't hesitate to ask them in the room. Thank you, everyone. Take care.